Hello, everyone. Welcome back
Hi.
and happy to see you again, Marianne. How's it going?
It's been very very busy
I
for
know.
everything personal business, like in our where I am, my industry at the moment. It's been very crazy, and so that's the reason why I've been missing you guys for quite a while. So thank you
We
so
missed
much.
you
I'm
too.
back.
Yeah, I told them about your house renovation,
I
but we're
know
going
I've
to
missed
have a
quite a few
discussion.
episodes.
We can have a discussion on that one. You're going to share a lot of information about. I'm looking for
What's
my
that?
about
Yeah.
your house renovation. Uh, yeah, hang on a minute. I'm just trying to sort out my things. Anyway, welcome everyone. Magandang gabi and kia ora. We are happy to see you again on this interesting. Oh, lagi namang interesting. We always have this interesting topic anyway, and we're quite excited about our
Yeah.
topic, especially. So, yeah, would you like to? I'm just sorting out some stuff on my screen, Marianne. Uh, yeah, I have a new laptop, and
Yeah,
just a while
it's
ago we
kind
had
of
a chat.
becoming frozen a little bit. Or is it?
No. Hopefully not. Uh, can you hear me? Can you hear me, Marianne?
Yes, I can hear you clearly. And is that a background music? Yes.
Yeah. Is that okay? Or should I just
Can you
stop it
not
for a bit?
hear me?
I can hear you. Yeah. All good.
A little bit, yeah.
And yeah,
Okay,
we would
perfect.
we're having, a goal is not just to buy our own house, but also to be debt free as soon as possible. That's my aim because I'm already a homeowner. And I don't know with you, Marianne, what's your goal?
Well, of course, it because at the moment we are staying at the family's home. Of course, our goal is to also have our own. So we're praying about it. I know that we are in a position that we can, but at the end of the day, finding your home and the perfect home for you and your family, it takes quite a while. Like I think there's gonna be like you view the house and you'll be like, nah, I think something's missing. It's actually quite a journey to really find what will be perfect for your family. As what we've been talking about Ate from the previous episodes as well, you got to have a lot of different factors that you need to, to put in, in your priorities and everything, and what's important and what is basic, especially like say like me, I have two young kids. I would still be want to be around this area because this is the closest to the school and my in-laws.
And that's why my priority is this tonight's topic. We're tackling one of the biggest financial challenges as homeowners, and we want to pay off our mortgage as fast as we
Mortgage.
can, despite the
Yes.
interest rate changes.
Yes, that's so true. And of course, again, we are here to help you navigate the home buying journey with, of course, the experts' insight and practical advices of the people that we've been inviting in our show, right, Ate?
And to guide us through this, we're having the topic Smart Mortgage Hacks. We have a returning guest, someone who knows mortgages inside and out. And actually, she's our mortgage broker since we started and up to now. So let's welcome Miss Paula from ANZ. How do we? I'm sorry. Yep, at the stage. Yay! Thank you so
There
much,
it is.
Paula,
Hi,
for
nice
gracing us.
seeing you again.
It's been
Hi,
a long
Paula.
time.
A year, I think.
Yeah, I think so.
Welcome back.
I
Welcome
think
back.
so. Yeah, all ready to go. I've had a few technical issues, but I'm doing this on my phone now rather than my laptop. So I hope you can hear and see me.
First
Um,
and foremost,
Oh,
Paula,
yes, we can
thank
hear
you
you
for
very
your
clearly.
thank you so much for your bravery because I know you were telling me a while ago about the technicalities and everything.
yeah. It's all good. I can talk in front of 200
Yeah.
people, but put me online and it's just like
I know. So we're gonna start. What will be our first question? Let's start with a very basic. Why is it important to have a plan when paying off a mortgage rather than just making the minimum repayments?
Okay, cool. So I've just got a couple of things to go through before we do. You would lovingly introduce me as a mortgage broker. I'm actually not a mortgage
Oh,
broker
sorry.
or mortgage advisor. It's okay.
Uh,
It's because I
thanks
work
for
for
clarifying that.
ANZ.
Yes, yes, you only work for ANZ.
I
Broker
only work for
with
ANZ.
many.
So I'm a
Yes.
mobile mortgage manager. So mortgage advisors or mortgage brokers and I, we're sort of a little bit in competition with each other. And in saying that though, I know a lot of mortgage advisors because they frequently come from a banking and a mobile manager background. So if anyone ever needed one, if I couldn't help, then I've got plenty of friends in the business that can help. Secondly, I just have to do a little bit of housekeeping as well, that tonight I'm not giving any personalised advice. It's just some general information that you can mainly get off our website and a few home loan calculators. And it's a lot to do with the discussions I have with my customers on how they can manage their home loan debt, how they can pay it off faster, a few tips and tricks on your spending. And I've just done a couple of examples too about increasing your mortgage repayments when you can, and it shows the difference in the loan terms. It makes pays your loan off a little bit faster. So when I calculate home lending for my customers, I generally look at a 30-year term, because buying your first home, it's a scary thing. And the professionals you have with you, one, you have your banker, you have your real estate agent, you have your solicitor, and you have your insurance specialist, and that's life insurance and things like that. That's what we need to do. So that they're the professionals you have, along with your family, who are always going to give you their opinion on what sort of house to buy, where to buy it, whether it be close to the in-laws or very far away, like mine first home was, a long way from my in-laws. So we look at a 30-year term, and when I'm talking to my customers, because they haven't had a mortgage or in the past, and generally your mortgage payments are higher than rent, my initial conversation with them is looking at the 30-year term. Yes, that seems like an eternity when you're in your early 20s, and it's definitely too fast when you're not in your early 20s, where I'm definitely not. And we look, my recommendation is most of the time is to have the longest term, get yourself established with all the bills that you have to pay, the rates and the insurances and the maintenance and everything else that you haven't had to pay in the past. Get a grip on all of those and make sure that everything is flowing in terms of your budget that you would have discussed with your banker or your mobile manager at the time. Then after that, then we can look at ways of getting you debt mortgage free before that 30 years. And there's a few options we can use to do that. So where did you want to start first? Do you want to look at interest rates or some tips and tricks, or which way do you want to go, Juvie?
I want to start with the interest rates because we're going to renew our one soon.
Okay, so everybody would have seen that the interest rates have been reducing over the past year, 6 months to a year. I'll give you a personal example of myself, and I use this with my customers. At the beginning of last year, I fixed my home loan for a 3-year term. I live on my own, and having a fixed rate is, you know that your payments are going to be the same for that fixed rate term. So I looked at that and went, oh, yeah, 3 years is good for me. But now the rates are coming down, and I'm going, oh, I'm paying so much more interest than if I'd only booked it in for a year. I could now get one of these hot rates that the banks are offering. So it's not always, excuse me, just get rid of my cat. It's not always the best idea or the worst idea to pick a longer term fixed rate. Every rate that you look at, it depends on your circumstance. I thought it was right for me to fix things for 3 years because my income doesn't change, and I knew that for the next 3 years my payments would be unchanged and I could cruise through life and do what I need to do. All right. So
Yeah.
The recommendations lately have been people have been only fixing for 6 months, putting on a 6 months fix, or actually leaving their lending on a floating rate just to see what's been going on with the official cash rate announcements that have happened. So now I've got a lot of my customers are going, hey, Paula, I'm on a floating rate. Now I want to avail of a fixed rate. What can you do for me? So we sit down and have a conversation of how long do you want to have a fixed rate for? So, and that's a conversation you have when you have your mortgage for the first time, whether you're a repeat home buyer or anything like that. It's if you put your lending on a fixed rate, it's lower than a floating rate loan. Fixed
Why is
rates,
that so?
because we know that the rate's not going to change. So there's this certainty. So the banks buy their lending at a certain rate, and then they can sell it at a certain rate. The advantages of having a fixed rate, yes, it's lower. You have your repayment certainty because you know what your repayments are going to be, because a floating rate is exactly that. It can float up or down. In today's market, it doesn't change that much, but 10, 15 years ago, the floating rate used to change every couple of months. So now it's not so much. The disadvantages of having a fixed rate is exactly what I'm going through now. My rate's really high, and I really want to reduce my outgoings or reduce my interest rate and therefore reduce my interest cost. But I have to pay a break fee because when I fix my rate, it's the bank buys the money at a certain rate, and it's a true cost to the bank. So can I afford to break my home loan at the moment? No, I can't. So that's why I'm sticking with the rate at the moment. All right. When you have a fixed rate loan, you can make a bulk reduction of your principal balance of 5% of the loan amount. So if you've got a $500,000 loan and you've got a spare $25,000 hanging there somewhere, you can make a bulk reduction at no break costs for you. And most banks have it. I'm only going to talk about ANZ because I don't work for other banks. But that isn't another advantage of having a fixed rate. If you pay it off in full, there generally is a break cost. All right. A floating rate with a fixed rate loan, you can, if you say, oh, actually, I've got a spare $25, $30 a week, you can increase your payments, and increasing your payments also reduces your loan term. So you're paying more off the principal and then less interest. Now, I talk about customers, can you give up a cup of coffee a day? So I did a calculation on a home loan of $500,000 at, say, 5% over a 30-year term. The set weekly payments are $616 a fortnight. Now, you've got options to, at the outset or anytime, just round that payment up to $620, which is a $3 a week increase. You automatically take 3 months off your loan term just by that $2 or $3 a week. All right. If you say, I can give up, I'm a coffee addict and a coffee snob. So when I'm working in a branch or wherever, I tend to buy coffees, and at $7 a pop, it can add up a bit. So if you forego 1 cup of coffee 5 days a week, which is $35, if you added $35 onto your loan repayments, your loan term would shorten to 26 years, 6 months. So you're taking 3.5 years off just by putting on a coffee a day. So there's a real saving in when you can look at your budget, all right? But at the end of the day, you still have to have your little treats. You can't, you have to have a bit of a want in life, not just pay your needs. There has to be a little bit of a treat somewhere.
A follow-up question on the floating rate, Paula.
Yep.
Because I haven't tried it yet, and I was thinking, but how will it work if your payment is not fixed and you're not sure if you have enough money when the interest rate goes up suddenly?
When your interest rate goes up, your payments will automatically increase because we've got that factored in. You do get a warning. You do get confirmation of what it is. But with a floating rate loan, you can make bulk reductions at any time with no penalties. I think our minimum is $1,000. So when you do have some spare money, you can say, well, I'm not going to put it in the savings because it's more cost effective for me to put it onto my home loan. So you can pay that down. Or if you're on a standard salary and you get quarterly commission, for example, I would look at structuring your lending to have the majority on a fixed rate and a smaller portion on a floating rate, so you can pay that floating rate down faster.
Oh, that's a good thing that you've mentioned. Is it possible, because we've split up our mortgage, is it possible that one part of it can be a floating rate? Because
Yep. So you'll have two. So say you've got $500,000 worth of lending. You could say put $450,000 on a fixed rate. So you got that certainty of payment, and $50,000 on a floating rate. So you can chip away at that $50,000 faster, and knowing that you've got a good rate on the majority. And then when that 50,000 is paid off, now it could be 10,000 or even 5,000.
Yeah.
It doesn't have to be a huge amount on a floating rate. You could put 495 on fixed and chip down that $5,000 faster, pay it off in a couple of years, and then bring another lot across each time. So there's ways and means of minimizing your costs. It's you need to have the budget, and you need to know what you're doing and sort of where your expenses are. If things are tight, it may not be a good idea to have a floating rate loan. All right, as a first home buyer, and I generally go down that conversation, is just go through a fixed rate period, whether it be 6 months or a year, go through just with that, see how your budget is, because what you can do, if you find the payments easy, put some money away, and then when the anniversary of your fixed rate is, you can make a bulk reduction to your loan. And you know that money's sitting there and can go off towards your loan. So there's plenty of ways to do that if you want to, and if you can. I mean, not everybody can. My loan term is maxed out, being on one income. That's just where I have to be, and if that's what it is, then I'll be 83 when my home loan expires if I just keep going. But I won't be working by then. So it's also having that plan. At the age where you don't want to work anymore or don't have to work anymore, what are you going to do? So that's a whole nother conversation.
So for the floating rate, you can change to fixed rate anytime you change your mind?
Yeah, of course you can.
Yeah.
You definitely can. So if you think, actually, the floating's not working for me, I'm not going to have those extra funds, it's a matter of, you can do it online through our contact centre. Or if you have a friendly mobile manager, say, hey, Paula, what can you do for me? And I can look at the fixed rates and go from there. And it's a matter of just changing it across.
You're quite easy to email, actually, and you would reply as soon as possible. So, yeah.
I try to. I have most of my customer visits at night, so I sit in front of my computer 99% of the day. So, yeah. And I don't like having a busy inbox, so it's in and it's gone.
That's so true.
Yeah.
So going back to that one, Paula, so just to summarize, to those who actually missed out on the parts of what you were talking about, so the best advice for a first home buyer would have fixed rates. And I think if you have, correct me if I'm wrong, and I think if you think you're kind of, you're still young, and you earn, like me, I'm on sales and I have that commission, like probably like in the quarter is quite a good amount that I can actually set aside. So do you think people who are kind of like a little bit younger and a bit of an extra money would better have to have a floating? Which one would it be?
Some of it. Put some on a floating. I've got first home buyers that have just purchased and their whole loan is on a floating rate at the moment because they didn't want to fix the rate because the rates are changing. So so they haven't quite decided which rate to pick yet. So they're managing with a floating rate. Also, whatever bank you go to, make sure you ask for a discount on a floating rate, right? No such thing as a standard floating rate anymore.
Okay, so discount on that. We might be needing to be.
I will always provide a discount. Yeah, I don't like charging full rates, so
So there's no So there's a discount. Yeah, I'm gonna talk to you about my upcoming
Yeah,
renewal of
yeah,
my.
we can do that separately.
Yeah, we'll do that. Any more
Yeah.
questions for Marianne? Do you have a follow-up question?
Well, I think like so following up on those, I think that's quite good tips, which one to choose if we're gonna
Yeah.
be floating rate or a fixed rate as well. But of course, on the flip side, what will be the common mistakes for mortgage, like people who has mortgages? Do
Yeah.
we like is this one of the common mistakes that happens, like choosing which one they want to use?
That's the hardest one, but everybody's circumstances are different. Okay, so my circumstances, I use myself as I don't practice what I preach. What I do for me may not be right for everybody. So I booked mine for 3 years because I didn't even think that this turmoil in the interest rates would happen till the end of this year. Just going on what advice I've listened to of the economic people on the radio. All right, I get the same advice as everybody else. So I tell people of my little, this is probably what you don't want to do, and learn from me. So it's, yeah, everybody's circumstances is different, but at the end of the day, whoever you deal with should
Yeah.
have your best interests at heart. And if someone's told me, oh, I want the 3-year rate, I will actually go, are you sure? What do you think the benefit is for you? Because the majority of customers at the moment are only fixing up to 2 years because we've got a good 2-year rate. Most banks have, because of the proposed thoughts about the OCR changing again this year. No one wants to book in a rate that's too high at the moment. So, you should get people going, are you actually sure you want to book for that long, lock it in for that long? What are your thoughts about it? And then go from there. I had a prime idea of what I wanted to achieve, hasn't quite worked out. Yeah.
I've
That's
experienced the
true.
high interest rate last year and it really hurt our pocket. And so we are thinking now that the interest rate has gone down, a third of our mortgage, we're thinking of locking it in for 5 years. But I have noticed that the longer you locked it in, the interest rate has gone up compared to last year.
At the moment, yes. So a longer 3 years and longer is higher than 2 years and shorter. And that's just the way the wholesale market is looking. So I don't pretend to know how the rates are organised, but it looks at competition between the other banks, the wholesale market, the risk involved. So yeah.
Give us an idea if the interest rate is gonna keep going down this year until next year, or is it gonna? Yeah,
If I
you
had a
might.
crystal ball, Juvie, I probably wouldn't be working for the bank. I don't get any insider knowledge than anybody else. All right, I listen to the economists on the radio and on the telly.
What are the factors that affects
They
the?
have been going down since late last year.
Mm,
That's all I can really say. And from what you hear on the radio, there could be another cut in the official cash rate. Yeah, sometimes when we've changed our rates just before the cash rate, so we have special offers going all the time on the ANZ website, and you can always go to your banker. So if anybody out there banks ANZ and your rate's up for review, make sure you get the best possible rate that you can, and you can lock it in through different methods, whether you use internet banking or GoMoney or talk to someone in person. So you'll always get given the best rate for your circumstances.
okay.
True.
Thanks for that. Any final tips for our homeowners already, and they want to pay off their? Is there any other way to
Yeah.
pay off the mortgage quickly?
You can increase your payments anytime. So if you have a fixed rate, we have the ability that you can increase your payments up to $250 a week without any costs. So as I showed before, by increasing your payments by $35 a week, it takes makes your loan term shorter. So on our website, there's a home loan repayment calculator, and out the side that says if you increase those payments to, you'll shorten your loan term. So obviously, the more you pay on the principal amount, it
Yes.
cuts down on your interest costs, and you can be debt free that much faster. And if anything happened that something's in your circumstances changed, the bank can look at reducing those payments back if necessary. But just make sure that it's the right decision for you to increase those payments, even if you do it a little bit at a time so that it feels comfortable. You might be doing some more work for yourself by doing that, but I think you need to be comfortable about increasing your payments. The way the cost of living is at the moment, you don't want to set yourself short down that end as well. Your mortgage is your biggest cost, but rates are going up, insurances are going up, and daycare costs are just phenomenally high, So it's a matter of looking at your overall budget. I know why you want to live by your in-laws.
That's so true.
I can work that one out. So you have to look at your budget of when you do that, but make sure that you get some advice and have a sit down and have a think. I always get my customers to say, this is what it could look like if we've talked over in person or over Microsoft Teams, because we do a lot of virtual appointments now as well. That this is what it could look like. Think about it, and if you're happy to continue, do that. But it's always about your budget at the end of the day, what you can afford.
That's
if you can give up a little treat,
Paula, so like for people like me, we are in that, in that journey of we haven't actually talked to either a broker or even our bank. Our savings is in, of course, ANZ as well, and we are actually thinking of with their mortgage as well. So for people like me or those who are looking into buying their first home or refinance, what do you think we should do right now? What do we need to prepare for?
Okay, so for example, if you were coming to me and all your banking's with ANZ, I can see all the systems. That the easiest thing is to contact the bank for someone to come and see you. So with a mobile manager at ANZ, always going to talk about ANZ, we can come and see you at a time and place that suits you, whether it be on the weekend or whether it be at a cafe or after hours. That's what we do. I don't want you to take time off work to go into a branch if you can't take time off work. So as a mobile manager, or we're just home loan based. I don't know how to open up a bank account or anything like that, but home loans forwards, backwards. It's having a look at your budget now. Is there anything you could take out of your spending that you don't need? So think about how you spend your money, because having that conversation is what your budget will look like when you have a home loan. That is most of the conversation that I would have with you, because we know your spending is different when you don't have a mortgage than when you do have a mortgage, because you've got those other fixed commitments. So think about the things you could give up. Think about the things that are essential in your life. Mine used to be Sky TV. I would chew my arm off before I gave it up. I've given it up already and I've got it back, but I'm now going to give it up again because there's nothing on. So have a look at the things that you spend your money on, all right, as to what's essential and what's not essential, because the main conversation. And look, even if you're not quite ready to buy, you don't know what you can borrow until you talk to an expert.
That's true.
So even a pre-approval, or just have that conversation, say, am I ready? Do I have enough deposit? I see a lot of people that aren't quite ready, so I go on that home buyer's journey with them, and I check in every so often. Hey, have you paid off this debt yet, or have you got any more savings? To have someone go through that journey with you to help you, because you don't know what you don't know.
True.
Yeah, that's so true.
Yeah.
Right.
You have any other questions?
We've talked about floating rate and fixed rate. So yeah, I'm thinking of trying the floating rate. And I just want to emphasize this ANZ, because I'm keeping an eye on the different rates of other banks as well. ANZ is still the number one, giving a good
one.
Hey,
Yeah,
look,
so
always, even what's on the special offers, always ask if there's anything more. All
yeah,
right.
and that's why I ask
There
Paula all
isn't
the time
there.
before I walk in.
There isn't always the ability to cut any rates, but sometimes
It
they might be
depends.
able to do a little bit better.
Yeah, yeah.
Yeah.
Awesome. Thanks so much, Paula, for your time tonight. I appreciate it. And I will
Thank
contact you soon
you.
about our other
Yeah, I'll wait
portion.
for your email. And Marianne, when you're ready, let me know.
Yes. Oh my, I
By the
think I
way,
have to cut a lot of eating outside.
are you happy for me to share your email address,
Yeah, of course you
Paula?
can. Yeah,
Okay, I'll do
definitely.
that shortly.
Definitely.
So for our
Okay.
viewers, contact you.
All right,
Thank
ladies.
you so much.
Okay. See you later.
Thanks,
Bye.
Paula. Have a good
Bye.
evening. Bye.
Oh, there you go. I've
Oh
got
my
her name
gosh.
here, and I'll just add. Let me see what I can add. But that was really a wonderful
Yeah,
this
I
session.
actually had a bit of a question about that at the end, which is this is a really good topic as well because not everyone really understand the difference of the floating and the fixed rates. So pretty much what they do is they just pretty much pay off their mortgage, but they didn't really understand the concept of which one is actually better in a certain situation that they're in, which is it's quite cool for Paula to say actually I would suggest if if you've got
Yeah,
extra money like that, then floating would be very very good because then at least you can pay off up to 250 per week. Was it per week at or per month that she said that you can actually
ooh,
increase up to 250 for your repayment?
ooh, I missed
I
that
think
part.
250.
Maybe I need to replay it. But yeah, I've read
Yeah, so
250.
yes, so which is it's quite cool, and up to 1,000, I think, up to 1,000 for for the month.
I think
So
so
250 a week, up
because we were
to a
allowed
thousand
on
a
our
month.
first year with ANZ. The following year, will we have to renew the mortgage? We were allowed up to 10,000, so that's like 10,000 1,000 a month.
A
That
month.
you won't get a
Yes.
penalty because if you pay more, if you add more, I think. Uh,
It kind
yeah,
of changes the whole. That's
I forgot
true.
the
That's
term there,
actually true.
but they
So
allow
that
you
would
to
be
top up.
perfect for say something some people like me who works in sales, and we do have those monthly commission, and it kind of like okay, you have extra money and you can
Yeah.
put it in the additional repayment. It's really really cool.
Yeah, I think that's a good idea for those side hustlers. You work full time
Yes,
and
like
then you.
you.
I'm still having a second thought. I'm still a bit hesitant with that floating rate, but I'm really keen to try it. Like what she said, you can try even just 5K floating rate. So maybe I'll do it
Yes,
because we're
maybe
going to
try
renew
have a
in April.
test.
We might
Yes.
have some messages here. I got a message from my student. Oh no, why is he watching? Because anyway, I will not be popping that in the comment section. But we have the name of Paula, the ANZ Mobile Mortgage Advisor, on the screen, and her email address as well. If you want to contact her, I tell you guys, I contact her, especially
It's quite
closer to
crazy.
the time we're going to renew our mortgage interest rate. So
Mm.
she's easy to talk to. Like what she mentioned, she's a mobile mortgage advisor. She will come to your place, and that's how I met her. I just contacted.
Yes,
I
ANZ.
think I asked for a mobile mortgage advisor in 2020, and I didn't know it's gonna be Paula who came to my place, and easy peasy. I don't have to travel.
That's so good. Yes. And then she also mentioned that she can do Teams meetings. So if you can't, if you're not comfortable of actually going out and meeting her and everything, then you can pretty much I think our life insurance financial advisor has just met us online. So it's quite cool. So everything is very very convenient now.
Oh, yeah, yeah. Talking about that, maybe we can invite your insurance advisor to
Financial.
for the.
Yes, because like the same thing as what what's his name our last financial advisor that guest we have a guest with before. I forgot.
Bobby
Um,
Chua.
Kuya Bobby, yeah. So
Yeah.
si Kuya Bobby, same thing as his, but then with him, he's more in a certain insurance kind of, like he's specializes on a certain insurance. But then the one that I was dealing with as well, I was also he's also specializing in that certain insurance as well. It's pretty much like Sir Bobby. But the reason why I went through him is that it went through to my request for my health insurance. So they sent
Mm.
me a person to contact me, because I was more looking into for a health insurance, because Steven has health insurance, but I have life insurance, and he doesn't have life insurance. So what he did was to actually just merge everything in one, even the kids' health insurance.
Yeah, yeah.
So it's just one payment every week, every month.
Includes everything. Health.
Includes everything. Yes,
Oh,
life and
good.
health of the kids.
Oh, we can talk
So
about that some other
we're
time about your insurance and my insurance as well, sharing it with everyone so they can get some ideas.
yes. I think it is very, very important, which is what Sir Bobby says. It's actually very important, especially when it comes to like unforeseen circumstances that we don't really see, right? So, and especially if you are buying a home, you wouldn't want, to burden your family if something ever happens. Then as long as you've got life insurance, let's just say me, and then we have a mortgage, imagine that, and then something happens, that how will my kids afford to pay off the mortgage? I don't want them to be kicked out of the house, so yeah, I think it's, protecting your family as if something happens.
Right. There you go.
Yay.
For our viewers, if you found this episode helpful, don't forget to like, share, and subscribe, especially to those people you think are considering of buying their first home here in New Zealand. And if you have more mortgage related questions, feel free to drop them in the comment section below or contact us. Mary Ann is still connected with real estate friends,
Mm,
real estate agent friends that she has. And me,
yes.
you feel free to contact me as well so I can relate the questions or relay the questions to people that I
Yeah.
know can better answer your questions. And we might be able to just cover them in the future episodes. And if you want to share your ideas, let me know and we'll be happy to have you on the show next time. So
Yay. Thank
join us again
you.
next week for another exciting topic on home buying in New Zealand. Any few last
Thank
words?
you. Thanks,
Thanks
everyone.
so
Nice
much,
seeing you
everybody.
all
Have
again.
a good night. Bye.